What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor. Hope you're doing well. Commercial real estate saw the largest month-over-month decline since 2010. Wanted to talk a little bit about what's going on there, where the cracks are in the commercial real estate space, and why I think it's different than the residential space. So we're going to get into it in a minute. One thing I wanted to mention is that I am a residential realtor. I don't do a whole lot of commercial real estate. I am involved in a handful of commercial transactions. I just kind of have my dip my toes in the water, but I don't transact commercially like I do on the residential side. So I'm not as much of an expert as I am on the residential side. So I'm reporting on these articles, and I'm seeing, trying to take my economic knowledge into this. But as far as firsthand experience goes, I'm not speaking from firsthand experience, I guess is the disclaimer I wanted to make at the beginning of this video. So let's get right into the articles here. Commercial property pricing fell fastest in 13 years last month. Prices for commercial properties fell at the most rapid pace since 2010. National All Property Index dropped 4.8% from a year ago and 2.7% from December, which, if the pace were to continue all year, would be 27.9% annual decline, which is pretty crazy. And basically, it has to do with a spike of mortgage rates. So the reason why these properties have been declining is because commercial real estate is sold through lending, and the lending that you get on commercial real estate has to do with what's called the debt service coverage ratio, or the debt coverage service ratio. So basically, does the property make enough income to cover the debt, to cover the monthly payment that the lender is giving you? And if mortgage rates are higher, then all of a sudden the amount of your monthly payment is going to increase, as I'm sure many of you know, something that's pretty intuitive. And if your monthly payment increases too much, then the price of commercial real estate is going to fall, because because the rents can't cover that debt, right? So if interest rates are too high, then property values have to come down in order for people to get financing and transact with these products. And something else that's going on. So basically that's what's happening. That's what's causing these prices to decline, which is different than residential real estate, because in residential real estate, I mean, we are seeing that. We are seeing interest rates increase, which is affecting property values, which is pricing out some buyers from the market. It's absolutely happening. But the thing with residential real estate is people typically lock into longer term rates. So, the typical interest rate, when you hear that headline number, is a 30-year fixed rate mortgage. So the purchaser can lock in for 30 years and they don't have to worry about their payment adjusting. Whereas commercial real estate might be structured on a 3-year note or a 5-year note or 7-year note, where the company has to refinance after those, let's say, 3 years. So if you got a loan in 2023 at 3.5%, and now your 3-year term is up here in 2023, excuse me, well, you're going to have to refinance out of that property. And when you refinance into a 6% rate, into a 7% rate, the numbers might not work, even if your rents have gone up. So you can see how that spells trouble for commercial real estate. And looking at some of these articles here, so this is out of The Real Deal. CRE's distress moment is here. This company defaulted on $1.7 billion worth of loans. Brookfield walked away from $784 million worth of loans. So these defaults are coming with these big commercial office buildings. And that's another thing that's playing into the commercial real estate market is, look, apartment buildings fall into this as well, but so do commercial office spaces, which, with more people working from home, there's probably going to be less tenants renewing their lease as we start to move into 2023 here, which spells trouble for, again, people who need to pay their debts and people who need to service their debts. And I heard about this a few weeks ago, I guess probably a couple months ago now, on this Bigger Pockets podcast, that I was listening to, the On the Market podcast. It was called Deleveraging. The dominoes are about to fall, and this was all about commercial real estate. I'll leave all these links in the description for you folks, but it talks about essentially what I'm talking about, where these companies are leveraged and they're as their payments are coming due, they're going to have to refinance into different products. And some of these lenders, they overextended on cheap debt and might have taken out their regular payment with 20% down and then taken out another mortgage on top of that, a bridge loan to come up with some of their down payment for their lender. And so you can see how, if you're very leveraged and property values are starting to fall and you're forced to refinance, your monthly payment is going to change, then there's big trouble that could happen in commercial real estate. But the reason why I don't think that this is going to happen in residential real estate is because residential real estate is based off of completely different numbers, where people aren't, when I talk about residential, I'm talking about primary homes, and the mortgages that people get on their primary homes are based on their income, on the jobs that they have. And right now the job market is still very strong, so people can pay their mortgages, and they've locked into a rate and a loan product, a monthly payment that they can afford based on their jobs. Now, if we see unemployment start to spike up, or we see earnings start to decrease, I mean, yeah, inflation is hot, which is hurting people, hurting Americans, and hurting homeowners, where they don't have enough money, as much money to spend each month. But overall, they should be well qualified for their products and should be able to pay their mortgages back. So anyway, shorter video here for you folks. Let me know what you think. All these links are left in the description for you. All my contact information is in the description as well. If you're interested in buying or selling property here in Vermont, please reach out to me directly. Although, again, I said I primarily work in residential real estate, there is a commercial broker at the office that I work hand in hand with for commercial deals. So even though I'm less experienced, I'm working with somebody who is very experienced and will be happy to help you out around the area. So reach out to me directly. Phone or email is great. Leave a comment. Let me know what you think about this video, and I'll see you guys in the next one.